All right, let's get right into it. We're going to talk about a really interesting story playing out in the Indian jewelry market. It's all about one company, Silgo Retail, and how they're at the very center of a massive shift, a move from old-school tradition to a totally new way of selling jewelry. And trust me, Silgo is right in the thick of it.
So, what's the deal with Silgo? Well, for as long as anyone can remember, silver in India has been kind of looked down on as poor man's gold. Silgo is making a huge bet that they can flip that idea on its head and turn silver into what they're calling accessible luxury. The whole idea is to tap into a massive change in who's buying jewelry and why. And you know what? Let's just cut to the chase. The final verdict here? Silgo is a high-risk value play. Now, let's break down exactly what that means.
First things first, you gotta understand where Silgo comes from. Their DNA is pure Jaipur, the heart of India's jewelry world. And this is where they get their edge, their secret sauce. They've got this vertically integrated model, which is just a fancy way of saying they do everything themselves. They design it, they make it, and they tap into that incredible network of artisans in Jaipur. What does that do? It gives them a much lower cost to get their products to market. And in a game that's all about volume, that's how you protect your bottom line.
Okay, so with that background in mind, let's look at the upside. This is the bull case. Building a brand in a brand new market. It's all about how they're trying to ride this wave of changing consumer habits and really create something from scratch.
And right here, this is the absolute core of the bull case. It's all about their big strategic pivot. See, for years, Silgo was just a B2B supplier. Basically, they were selling silver as a commodity. But now, they've made a massive move by launching their own brand that sells directly to you and me. It's called Dyuti. The plan is pretty smart, actually. Keep the old B2B business chugging along for stable volume, but use Dyuti to go after those juicy, high-margin sales directly to consumers, especially online.
Now, this whole strategy, this big bet on Dyuti, it's not happening in a vacuum. It's riding on a massive market trend that's being called silverization. And what is that? Well, it's pretty simple. Gold prices are going through the roof, right? So a whole new generation of young, urban Indian consumers are looking at silver differently. It's not an investment for them. It's a fashion statement. It's for daily wear, it's fast fashion, and that is the wave Silgo is desperately trying to catch.
So if you really want to break down the bull case, it stands on three main pillars. First up is capital access. By moving up to the NSE mainboard, they can raise money way more easily than their private competitors. That's huge. Second, you've got the export ceiling. The government's whole Make in India push is creating new opportunities for high-margin exports. And third, and maybe most importantly, is scaling Dyuti. If they can get this brand to take off on platforms like Amazon and Myntra, that's what's going to really fuel their growth.
And you can really see their journey laid out on this timeline here. They started with that big transition to the main board. Then they showed incredible resilience during the pandemic by quickly shifting to digital. After that, it was all about recovery and then expansion. But look at that last point, FY24. The word is aggression. That's the key takeaway. They've shifted gears into an all-out push to make their B2C business massive.
Okay, but every story has two sides, right? So now we have to put on our skeptical hat and look at the bear case. And this is all about a very real danger, navigating the commodity trap.
And this visual really says it all about the competitive pressure they're under. Silgo is the classic underdog, and they are caught in a pincer move. On one side, you have the giants. Think Tanish. These are the legacy brands with massive trust in stores everywhere. Then, on the other side, you have the disruptors, like Jiva. These are the new, venture-backed companies pouring crores and crores of rupees into digital ads to win the online game. Silgo? They're great at making jewelry, but they just don't have the marketing war chest to fight on both fronts.
Drilling down, the bear case really comes down to three major risks. First, there's a low moat. I mean, let's be honest. A lot of silver jewelry is seen as disposable fashion, which makes it really easy for new competitors to pop up. Second, their finances have been all over the place. Their margins are volatile, which tells you they're struggling to pass on rising silver prices to their customers. And third, this is a micro-cap stock, which means liquidity is a real concern for investors.
So when you put all of that together, it boils down to one single critical question for the company's future. Can Silgo actually escape what's being called the scale trap?
And this is exactly what that trap looks like. Look, if you want to go from being a small regional player to a true pan-India brand, you need one thing above all else: trust. And in the Indian market, trust still means having a physical presence, a real store you can walk into. But building out stores, what they call a phygital strategy, is unbelievably expensive. It eats up cash, and for a small company like Silgo, that creates this massive chasm that they somehow have to get across.
All right, we've laid out the optimistic bull case. And we've gone through the pretty serious bear case. So where does that leave us? Let's bring it all together for the final verdict.
And here it is. The analysis is very clear on this. Silgo is classified as a high-risk value play. It is not what you'd call a compounder. You know, one of those companies that can just reliably churn out double-digit growth year after year. Those are the companies that attract big institutional investors. And as you can see, the so-called smart money is still on the sidelines, waiting to see if they can actually pull off this massive scale.
The report puts it very, very directly with this quote, saying, for investors with a high-risk appetite, it offers a ground floor opportunity in the organized silver retail story. So yeah, they're not mincing words. This is not for the faint of heart. It's being pitched as a chance to get in on the ground floor, but you have to be willing to stomach some serious risk.
So, given how complex this whole situation is, what should you actually be looking for? What are the key signals that will tell us whether the bulls or the bears are right about this?
Well, the research gives us a very clear watch list. Over the next year or so, there are 3 critical things to keep an eye on. Number 1, are they making real, measurable progress every quarter on building out those physical stores? Number 2, is the Dyuti brand showing consistent sales growth online? Not just a one-time pop, but consistent growth. And finally, number 3, can they get their margins under control and stabilize them? That would prove they actually have some pricing power.
And that really brings us back to the final, defining question. It's the whole story right here. Is their big bet on the brand Dyuti going to be enough? Is it strong enough to carry Silgo across that massive chasm and help them escape the scale trap? Or will they just get stuck as a regional player? An interesting idea that never quite made it big. I guess we'll see. The next few quarters are going to tell us everything.